cameras and your microphones. And with that, I hand over to President Lagarde, please.
Thank you very much, Wolfgang, and good afternoon, good morning to all of you. The Vice President and I are pleased to welcome you to our press conference. The Governing Council today decided to keep the 3 key ECB interest rates unchanged. Our updated assessment reconfirms that inflation should stabilize at our 2% target in the medium term. The new Eurosystem staff projections show headline inflation averaging 2.1% in 25, 1.9% in 26, 1.8% in 28, 1.8% in 27 and 2% in 28. For inflation excluding energy and food, staff project an average of 2.4% in 25, 2.2% in 26, 1.9% in 27 and 2% in 28. Inflation has been revised up for 2026, mainly because staff now expects services inflation to decline more slowly. Economic growth is expected to be stronger than in the September projections, driven especially by domestic demand. Growth has been revised up to 1.4% in 25, 1.2% in 2026, and 1.4% in 2027, and is expected to remain at 1.4% in 2028. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release that is available on our website. I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial monetary conditions. Looking at the economic activity, the economy has been resilient. It grew by 0.3% in the third quarter, mainly reflecting stronger consumption and investment. Exports also increased, with a significant contribution from chemicals. The sectoral composition of growth was dominated by services, especially in the information and communication sector, while activity in industry and construction remained flat. The pattern of services-led growth is likely to continue in the near term. The economy is benefiting from a robust labor market. Unemployment at 6.4% in October is close to its historical low, and employment grew by 0.2% in the third quarter. At the same time, labor demand cooled further, with the job vacancy rate at its lowest level since the pandemic. The staff projections see domestic demand as the main engine of growth in the years ahead. Real incomes are set to rise further, and the saving rate should gradually come down from its still high level, supporting consumption. Business investment and substantial government spending on infrastructure and defense should increasingly underpin the economy.